This is the Retirement Key Podcast with Abe Abish, founder of Abish Financial Services.
A lot of firms out there say they will do tax planning, say they will do Social Security planning and RMD planning, and typically they just do investment management. They want your money.
You've worked hard your whole life to earn and save. Now you need a plan to make that money work hard for you.
Where do you stand today with your retirement accounts, with your insurance, with Social Security, RMDs, taxes, all of it? This is how we need to think. We need to think outside of the box on these matters.
Abe is here to help you unlock the keys to your retirement.
Democrats in Congress have begun molding bills that would raise taxes to pay for the Biden administration's ambitious spending plans. And here's where the hard bargaining comes into play. Rick Newman with Yahoo Finance says a good example is the changing number when it comes to taxing capital gains.
I like this because we're finally getting to the point where we can see what might actually be realistic. First of all, that increase in the corporate tax rate, Biden wants it to go up to 28%, but the opening bid, if you will, from House Democrats is only 26.5%. But the capital gains rate, Biden wants the capital gains rate for wealthy individuals to be equivalent to the tax on income, which would be, under Biden's plan, 39.6%. But the current plan, the opening bid from House Democrats is a capital gains rate of only 28%.
Also up for debate, a capital gains tax on estates and raising Social Security payroll taxes. Abe, what are you expecting when it comes to tax increases? Despite the reality factor that seems to be sinking in with Congress, do you expect bad news that could impact retirement plans? Does this highlight the need for doing tax planning now before rates possibly go up? What are your thoughts on all of this?
Yes, absolutely to all of it, Heather. And what I would say is we should all expect taxes to go up. You know why? Because in 2025, our current tax code is scheduled to revert back to what it was before our current tax plan. But I think things will change sooner, as we are already seeing, these bills being worked on. So we need to pay attention, right? Because Heather, it's one thing to have saved a lot of money. It's another thing to have a large loss in retirement in terms of investment losses or just higher taxes and taxes eating into our retirement dollars. We have to pay attention to taxes. If you're not planning yourself to mitigate and lower tax as much as possible, if you're working with an advisor and they are not speaking to you about taxes, pick up the phone and call us, because we're not scared to talk about taxes, and we're not CPAs or accountants, but man, taxes are a huge part of our retirement plan.
Right.
For most people, Heather, our biggest expense for a lot of people in the DC metro area, our biggest expense in retirement, and we can't have that expense go up and eat into our TSPs, 401ks and IRAs and capital gains treatment and all these things. So we just had a 66-year-old gentleman call in from Alexandria, and his main concern, Heather, was or is taxes and inflation.
Really?
So, yes, he's going to retire at 70 in 4 short years. He's saved $1.6 million.
Awesome.
It's in SEP IRAs and 401ks, brokerage accounts, Roth IRAs. It's scattered all over the place at, Fidelity, Vanguard, a couple different big box firms.
Right.
And he wasn't afraid or concerned with the amount of money he saved, because he doesn't spend a lot. $1.6 million, great amount of money saved, plenty of enough money. So he's like, I think I'm okay there. What I am concerned with the most are taxes and inflation. And everyone's talking about inflation now, and most people now believe that our current inflation is not transitory, but instead it's going to be more of a long-term problem, probably. So we need a plan for that. We cannot have inflation erode and eat into our dollars, so that when we're 80 and 90, our money's worth a lot less, and same with taxes. So I like to say asset location is just as important as asset allocation. I'll say that again. Asset location, where your monies are physically held and where they are invested, whether it's an IRA, TSP, 401k, or Roth or brokerage account, is just as important as asset allocation and how you're invested. In other words, with this gentleman, Heather, $1.6 million saved. The main reason why he was concerned is because 1.3, nearly all of the 1.6 is in pre-taxed dollars in his 401k and SEP IRA and traditional IRA, and it's never been taxed. If taxes go up, I should probably say when taxes go up, although that's not a guarantee.
Right.
If and when taxes go up, he's probably going to be paying more taxes down the road, even when he retires because he has or probably will have higher income, lower deductions, right? He's not working, not maxing out his accounts anymore. House is paid off. So one of the biggest myths of retirement planning is that when you retire, you're going to be in a lower tax bracket. That is absolutely false for a lot of people in the DC metro area. Couple that with taxes probably going up. That can make for a problem, a tax problem, right?
Yep.
So we need to address this head on. Don't sweep it under the carpet. Let's plan for it. And one of the ways we plan for it, Heather, and help this gentleman is we simply looked at all of his income, put it into our tax planning software, told him exactly where he is currently in the tax code and tax brackets, and if it does make sense for him now to do strategic Roth conversions, for him now to do strategic tax planning to lower and mitigate tax as much as possible.
So beside taxes, something that a lot of folks are worried about in the immediate future happening right now is the fact that it's fall and it's a season that we love, except for when it comes to our market investments, Abes, because historically October is similar to September in that it tends to be a volatile month for the stock market. And we've certainly seen recent evidence of that. But Jason Katz of USB tells Stuart Varney on Fox Business, don't panic just yet.
We normally get over a 10% correction every year. We haven't had it in a year and a half. So there are preconditions for a bumpy ride. There are some yellow flashing lights here. But what there aren't, Stuart, are warning sirens going off.
Abe, is this the time of year that you find yourself having to calm some of your clients more often about the markets? And what is it that you tell them?
Yeah, I would say it's not only this time of year where, people know the markets, are generally down in September, October, but more so what's currently going on right now. I mean, look at Evergrande in China, look at what's going on with treasury yields and just the markets being at all-time highs. Yeah. We don't have to go back to third grade to realize that what goes up comes down, right? It's just science, it's math, it's the way it works. But if we're 58, 62, 67, 72, we don't want our portfolios to go backwards. We don't want, and a lot of people can't afford to lose much, if anything at all, let alone 20, 30, 40%. My God, that would cause us probably to go back to work for a lot of people. And we certainly don't want to do that if we're looking forward to retiring, right?
Yeah.
So we just had a lady call in. She lives in Arlington and she is 66 years old. She's retiring in the springtime of 2022. And she called into the show. She saved $2 million. So she's done a fantastic job living in Arlington where I grew up. And so she was also not concerned too much about the amount of money she saved, but is concerned about really messing that up, right? She knows, hey, I've gotten to 2 million. I don't want to mess this up now. And just because I'm taking on maybe a little too much risk, lose 20% of my portfolio. Well, guess what we found out, Heather?
Tell me.
When we did a simple investment and risk analysis for her through our investment software, Riskalyze, it gave her and us a speed limit based on how she was invested in her TSP and IRA. And we found that her maximum drawdown, the maximum amount she could lose if we have another 2008 is 25% of her portfolio. So 25% of her portfolio, we told her, is $500,000.
Wow.
If we have another 2008, you will likely lose $500,000 of your $2 million. How do you feel about that? Well, she obviously said, I don't want that to happen, right? Yeah. That's why I'm talking to you. What can we do to maybe eliminate or substantially reduce the effect of a potential 25% loss? We can simply reduce risk. And one of the things in our analyses that we do, Heather, is we point out, hey, what is your risk measure and what is our risk measures when we put together our portfolios for our clients? We showed her that the maximum drawdowns in our portfolios were way lower than a negative 25%. Okay. We also assured her that where her risk measure was at like a 16 or a 17 in terms of standard deviation, ours is in the single digits. So if you have a single digit risk measure, we know that the portfolio can only move so far one way or the other.
Okay.
If you have a double digit risk measure, it can move way up north. It can move way down south.
Got it.
Right?
Yep.
So simple yet powerful things that most people don't know how to put together on their own is how we help people.
Thanks for listening to the Retirement Key Podcast with Abe Abish. To learn more about Abish Financial Services, visit retirementkeyradio.com. And join Abe for his radio show, The Retirement Key, Saturdays at 2 p.m. on WMAL.
Patrick Volk is an investment advisor representative of J. Hagan Capital, Inc., a registered investment advisor. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Financial professionals are not licensed in all 50 states. To find out if Abraham Abish and Patrick Volk are licensed in your state, please call 571-577-9968. Abish Financial Services is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Abraham Abish or Patrick Volk. NPN number 770-3575 and NPN number 727-978.